He knows that I have no problem telling someone they're wrong. We live in an era of fraud in America, not just in banking, but in government, education, religion, food, even baseball. I thought we were better than this. I really did.
Key milestone in our nation's fight against COVID. Food and Drug Administration, the FDA, announced it is fully concluded. It's a thorough, independent scientific review. Delta variant is dangerous and spreading, causing a pandemic of the unvaccinated. That's the pandemic, the unvaccinated.
Well, now that the FDA has approved the Pfizer COVID-19 vaccine, public health experts now hope this persuades more unvaccinated Americans to get their COVID-19 shot. And from a recent poll by the Kaiser Family Foundation, found that 31% of unvaccinated Americans were waiting for the vaccine to be fully approved by the FDA. Well, after last week's little taper tantrum sell-off, stocks have rebounded hard and the Nasdaq has closed at an all-time high. S&P pushed to all-time highs but didn't close at an all-time high as the Dow rebounded hard as well. So, let's get into it. So, as stocks continue to go higher, the ongoing trend of 2021, according to JJ Kinahanen, is buy the dip. Now, this actually shows that there could be some degree of economic optimism out there as long as inflation and the Fed keep doing what they're doing and don't let the markets throw a taper tantrum. So now after the FDA fully approves the Pfizer vaccine, we're going to see a lot more mandates across the U.S. We already started seeing it with teachers, some healthcare workers, and now we're going to see it throughout more places in the U.S. So it's been 8 months since the FDA has approved the vaccine, and more than 204 million doses have been administered throughout the U.S. So, as more and more people get vaccinated and more mandates come out, now the Department of Defense said it was waiting until the FDA approved it. So, who else are we going to see start inputting these mandates across the US? Because I don't think every state is going to do it. So, when you think about the mandates of the vaccine across the US, another thing is the employment, right? So, still, 7 in 8 people who saw benefits reduced or eliminated still have not found employment. Now, this could be because unemployment benefits don't end until after Labor Day, but this just shows that people just don't want to go back to work. Maybe it's because of the COVID-19, or maybe because they just don't want to. So, 26 state governors, all Republican except one, opted out of the unemployment benefits several weeks before they're supposed to expire so that people start looking for jobs. Now, looking at the U.S. job growth, July we posted the the most jobs since around July of last year, and that's a positive sign for the US. But still, with unemployment benefits still being at large, we don't know what can happen as the unemployment rate is still at a high of 5.4%. Is it gradually coming back down? Yes, but that still doesn't take into consideration of what happens if unemployment benefits get extended or the Delta variant really actually has an impact on people wanting to go back to work, because as these benefits end and more people don't go back to work, how are they going to be able to buy and survive when they're not going to be receiving that extra money? So that's something I'm going to be looking into these next couple of weeks. And now let's get into the markets. Alright, so we have futures up right now. NASDAQ up about 0.16, S&P up about 0.16 as well as the Dow up about 0.17%. So getting into the heat map here, stocks were led by the NASDAQ, followed by the S&P, then followed by the Dow as well as the Russell in the back. And let's get into some sectors and really break it down for everyone that's tuning in. So, in the short term, you have communication services up, consumer discretionary up, consumer staples up, energy up, financials up, healthcare up. Everything's up other than real estate and utilities in the short term, as you could see. So, the only one that has a continuing trend right now is real estate. Now, if you want to look at from a long-term perspective, everything is up. The only thing that you see red in is a 5-year and a 3-year trend from energy. So that just shows where we're at this point in time in the markets, and it's extraordinary times because everything is going up. So here's some highlights of today. We have stocks in the news. Now Pfizer, that was in the news a lot just because of the vaccination approval by the FDA. So as for stock movers and sector movers, you have the biggest percent gainers, the biggest percent losers, as well as the highest volume stocks today. Now looking at sector movers, the top sector was energy, posting a gain of 1.71%, while utilities was the bottom sector, posting a decline of 0.52% in today's market. So let's get into some technicals now. Alright, so we got the triple Qs, the SPY, the Dow, and gold futures up right here. Now, triple Qs did hit an all-time high of 373.94, while the SPY did hit an all-time high as well as 448.23. And so, looking at these charts, you could see right off the bat that the triple Qs hit that all-time high and then came right back down to the previous high, and that's indicating support there. So looking at the SPY, the same exact thing happened. It hit that all-time high and then it cooled off, and then it had a little last 30-minute sell-off the last 30 minutes of the trading day. But as you can see, after hours, not that much movement, consolidation, and that consolidation is pretty good. Staying at that level, that to me is indicating signs of bullish behavior. And as we look at the Dow here, the same exact thing. It did hit an intraday high, right? And then as soon as it hit the intraday high, it started to pull back down. And then the last 30 minutes, it had a little sell-off. But now, where this sell-off stopped is indicating what, 1, 2, 3, 4 trading periods ago. And here on Tuesday, 8/17, it closed at this level, and then it started to sell off. And I talked about that briefly. This was because of the FOMC minutes. And then I talked about, obviously, Friday stocks came roaring back, and today they kept on going upwards and onwards, like I keep on saying. But then again, the consolidation is what I want to point out on all 3 of these charts. Well, actually all 4 of these charts. Because the consolidation, since it's happening at the end of the day and it's happening at that high period of the stock price, now that's indicating that there's a good bullish sign there. When a stock is consolidating at the higher levels towards the end of the day, that's indicating that there is strength in that stock price where it's at right there. No matter if it's an all-time high or just a regular trading period, it's indicating that there are some buying pressure there instead of selling pressure. Now, yes, you can argue that there was selling pressure in the Dow, and gold as well, and even the SPY as well as the triple Qs towards the end of the day. But what I'm trying to point out is the triple Qs and the SPY hit all-time highs, as you could see. So the fact that it came right back down to that previous high before the pullback of that first red candle, as you could see, like right here, as well as right here, the stock really didn't dip that much. Now, this red candle is indicating short-term profit taking, probably day traders or maybe someone's cashing out options. Who knows unless you get into the nitty-gritty detail. And as we're talking, futures are arising. As we could see, NASDAQ is pushing up and it is at 373.81 and the SPY is at 448.05. So tomorrow morning will really show if what I'm talking about is right. Am I right with the bullish behavior in these indexes? Because the same thing with the Dow. Now, the Dow, it came back down to the high of the morning, which is showing that it is from Wednesday's or Tuesday's close of last week. So when you're looking at the chart from a time period, the longer the time frame, the more, or I shouldn't say the more, the higher the chance that that trend or what you see in the stock chart, as in the technicals, is true and will reveal itself. Now, you never want to go short time frame to long time frame, always long time frame to short time frame. But if you're day trading, it's a little different. So now we're seeing gold futures move and they're dipping a little right now, so that's showing a little indication of possibly resistance at that level, or maybe something is going on that I haven't seen yet or talked about yet. So tomorrow, I think with what I just said, we're going to actually open up higher. And this morning in pre-market, I even said we're going to be pushing to new all-time highs, and the S&P almost did. It touched it, but then it retreated back. As you can see in the SPY there, it's at 448.05, so that's still going to be a new all-time high if it stays above that level and opens tomorrow. Now the Nasdaq's looking like it will open up higher, but time will tell as we have a whole night of futures trading, so who knows what will happen in the morning. So what I want to go over real quick is AMC. Now I bought call options at the $37 strike price today, ending this Friday, the 27th. So pretty high risk reward option play right there, but I do believe AMC will break out because of the signs that I've been pointing out. So as we look at the daily chart, we see that the stock actually broke out of this downtrend pennant after a long time of consolidation since its all-time high of $72.62. So when you break it down into the time frames, you could see from the 30-minute time frame that it touched the line of support at the $30 level, and it was just a straight, pretty much, I mean, it's an unorthodox V-shaped recovery, but it shows the picture of where the stock is trending. And then as you get to August 17th, the stock slightly retreats back down and almost touches where the support would have been in this little pennant. But it stopped right now. It actually touched August 16th when it broke out of this pennant and actually started to trade upwards. So that's a good sign showing where support is for AMC at this very moment, but now it's a volatile stock, so I could be wrong. It could actually break back down towards the true support of where it has bounced back from below 30 levels multiple times. So now you see this V-shaped recovery right here on the 30-minute chart, as well as this little handle. And so to me, with AMC making this move of consolidation up around, I would say, not all-time highs, but the fact that the consolidation period happened on the higher end of the trading day, right? Now this was the daily intra high, and then it pulled back. And then since that pullback, it just kept on going upwards and upwards until it actually touched that $37.88 level. Now, this is what happened last week. The stock went up and hit $37 multiple times and then just started to decline. So what I want to take into consideration is the consolidation factor, because if pre-market tomorrow morning and the stock starts declining, that might be a sign that it's going to be a bearish day and a very volatile day. But then again, pre-market is so minuscule with volume that anyone with big money can move the price of the stock very easily. So I really don't like to make any plays in the pre-market, but I like the pre-market to guide my eyes and what I'm expecting to see, because anything could happen throughout the day and news could come out some point in time that could affect the stock, or maybe there's inflation scares or something is just crazy, because this stock has a lot of volatile and nasty moves. So the fact that it was only up 6.89% today, now that's a good move, but for AMC that's just a normal up day, right? So there's nothing special about that, but the options are still one of the most active options that are being traded throughout the day. And I've touched upon that in the pre-market. So with the consolidation beyond the high level, and it's actually holding this level pretty solidly. Now, if it breaks above this 37, high 37, low 38 level, we could see a possible gamma squeeze, as market makers will have to hedge for those options. So this is going to be a big indicator. If we could get over that 38 hump, could we stay there? Who knows? But I do know, just looking at the data, that if we do get above that level and we hold that level, that could trigger a slight gamma squeeze and bringing that hedging together. So another one that I just want to get into real quick, because I did buy options on this today, as well as I went over in my pre-market video, is Pfizer, and that's because of the vaccine getting approved today. So as you can see, the consolidation is the strong point. Now, the only thing that I don't like looking at Pfizer's chart is the consolidation at the end of the day, is that it's towards the lower part, but there's not that much volume here. So this is really being controlled by the options market, and maybe their stock price was already built in or taken into consideration that it was about to get the FDA approval today, and that's why you have seen this dramatic jump in stock price with Pfizer, because they have just been on a tear. And looking at this right now, what I'm looking at for Pfizer tomorrow is, even though it was a red day, we are holding that 49 spot, which is the 19th and the 20th, and then the 18th and the 17th. That's where the support is from the daily chart. So as long as we're there and the options as well is controlling this market, I could see Pfizer actually pushing higher and maybe even past that $51 zone. But who knows if it actually will. I mean, after this news, maybe it might take some time until the stock price makes another run up. Maybe in the short term it will pull back, because this was already taken into consideration since last week of the stock's run up in the news. So we'll see tomorrow morning when I hop on and go on pre-market. But I hope you all that tuned in learned something from this, and thank you for watching, and talk to you tomorrow.